Good morning, traders. It's Thursday, December the 5th. Taking a look at the charts, we've got the SP 500, and what we're looking at, we got oversold the other day, pre-market or in the morning there. Market we talked about in the afternoon. I sent out an update saying it looks like this is a panic sell-off. We're going to see some type of knee-jerk reaction, oversold bounce. Typically, we see the first sell-off or two, the first short-term oversold territories end up having a bounce. We see bargain hunters step in and price bounces up. We had that similar type of price action here. Price bounced up. We got over here and price ended up bouncing back up, and it traded sideways for a few days before we had that a quick washout dump to the downside. Now overall, we've had a pretty good dump to the downside already, but really this is the first oversold territory we've had, and we're having that bounce up to the 20-day and the 5-day moving average. Yesterday from the afternoon, we were talking about looking for a 1 to 2% pop in the market, and we're up over 1%, but 1.25 or 1.5. We could see this continue to go a little bit higher, but overall, I still am anticipating sellers to step back in and bring it down for at least an ABC correction, which would be A, B, C correction to the downside. It would be the break of this level here that would trigger a washout low and more panic selling and potentially create a sharp drop to the downside. Now, if we were to just look at the current price action here in the more or less our cycle analysis, more or less when our pink cycle is trending higher, and we've got more or less our momentum cycles are constantly pushing to the upside. Usually we see higher lows in those, and then when things start to trade sideways and start to break lower lows, we start to see the momentum stall out. It goes up, sideways, and then we see correction phase. And you can see here as this starts to slope down, and we've got a strong impulse wave to the downside, and then this kind of flags out underneath. We're not having momentum back up to ram price back into an uptrend. Instead, it lags. And then, of course, when the market comes down and stutters, it eventually tries to do the same with the bottom, and it holds a series of tops, and we see this trend continue. And it's these kind of crossovers that we're starting to look at. You can see the market, the momentum here starting to head down. We've got this momentum high, this momentum high, this momentum high. It's also sloping down. And of course, we're making a series of lower or more stronger pullbacks is what we're actually seeing here. We're still seeing buying ramming up to the top, but overall, when we see pullbacks and pauses, they have more downward momentum each time. And we're back up into this territory where probably going to start to see the market top out over the next couple of days, and we could start to see it roll over for a bigger correction. Now, if that happens, we should see bonds pick up speed. Today, bonds are down 1/3%, but overall, bonds are in an uptrend, or they're basing here, and they do have momentum to the upside. Overall, if the stock market does roll over, we should see the bond market really pick up. This will be seen as a bull flag. We've got a move to the upside. It's flagging out here. You could argue in this pattern, it's come down, it's bounced, it's trying to build a base here. And when the equities start to crash and sell off, we should see another push up to the upside. And then potentially, depending on how far that crash goes in the equities market, this should continue to hold up and move higher. Now, if we take a look, let's take a look over at the chart of gold. Gold trading relatively flat today. Kind of gold and silver are mixed up and down a little bit. But overall, you can see we've had a rally, a pullback, a rally, a pullback. We're sandwiched between the 5-day moving average and the 50-day moving average. The trend, as you know, is still to the downside. It's making a series of lower highs and lower lows. This can be seen as a tight little bull flag, but again, it is at major resistance. We got all this depth here of this trading range to get through. So there's going to be some pretty good resistance if the dollar continues to fall, which it is falling again today. If the equities markets do start to roll over, we could very easily start to see the gold sector, the gold and miners really start to break out and extend to the upside along with bonds. Now, if we go take a look over at GDX, you can see here yesterday, big pop, moving to a new high. It's pulling back to try and fill some of this gap. It came close to the 5-day moving average. Overall today, it'll probably come down and continue to flag down, but it is showing a little bit of outperformance in terms of gold. Gold was not making new highs, but this one you can see gold miners broke above this new high. So now they're making a higher high. This is still kind of a minor high. This to me looks like a more significant standout high, but overall it has broken a first previous high, and typically what we're looking for are breaks of two previous highs. Once you break two highs, that means the momentum has fully shifted. So this is still got some work to do, but overall, if it can break out into this level, any pullback and pause in here would be primed and ready for the next leg to the upside. This would be very early stage jumping the gun to get in here, but it does look like it's primed and ready and starting to make that shift. Looking over at silver, up 0.1%. Big reversal yesterday, came up, tagged resistance, which is this consolidation and all these wick lows over here. It's also the 50-day moving average, and we talked about this 2 days ago, saying gold and silver both popped into resistance, and we are still in a downtrend, and the odds are they're going to pull back. And silver took a big haircut yesterday, down almost 2% or over 2% at one point, and it continues to kind of flounder here. And I wouldn't be surprised if we see it flounder a bit more. While gold and the miners potentially hold up, silver trades a little bit different sometimes during panic and fear waves, and obviously some big sellers have stepped into silver short term. Looking over at natural gas, up 1.4%. Again, we're looking for it to carve out a bottom, just like we saw over here, another bottom over here. We're looking for a bottom to potentially form down in this area, and then we're going to have potential upside move. We traded both of these last rallies. We played this downward move, and now we're going to be looking for potentially another rally to the upside going forward. But we need a bottom to form and give us a clear setup before that'll happen. Looking at crude, up 0.7%. Crude is just huge whipsaws, deadly to trade. It is really all over the place. It looked like it was starting to break down, but it didn't really break this first significant pivot low. And of course, yesterday, massive rally to the upside, and now it's poking to new highs. It's testing. It just hit that 59 level that we've been talking about. 59.60 should be a fairly significant resistance zone. And we'll see if it starts to form some type of topping formation, if there's any type of setup in this range. Ideally, we'll be looking eventually for it to roll over and give us a sell signal. At this point, it's getting a little long in the teeth. It's getting up to major resistance where huge selling stepped in before. And we're just going to let it do its thing. Don't really want to jump into the commodity when the commodity itself, like this, is swinging 4 or 5% every couple of days. So we're going to steer clear of that for now. Last but not least, take a quick look at utilities, XLU. Utilities seen as a safe haven play. Yesterday, big pop in utilities, meaning money is flowing into this sector because it is stable. No matter what type of a recession we go into, people still need heat, hydro, water, and or electricity and water. Overall, they pay dividends, and we're seeing money really move into those. So we've got a nice bull flag forming here. 20-day moving average is starting to hook up. The 5-day kind of flagging sideways. It's sandwiched between the 20 and the 50-day moving average, but overall, money is starting to show signs that it is focusing on the safe havens, and we could start to see this extend to the upside. A Fibonacci extension will give us a target of where it could go. If this breaks out of this pattern, we've got the rally, we got the pullback, and then we've got the upside rally potential. So we've got potential for XLU to go to 64.69. Now the way I see it are utilities, bonds, and gold are very similar in terms of safe haven plays. If the stock market's going to sell off, utilities can get hit. They might not get hit as hard, but a lot of times in the last year, we've seen the utilities perform very well and continue to move higher while the rest of the stock market sells off. So when we're talking risk off, really almost a basket of these plays, utilities, gold miners, and bonds, they should move somewhat in sync together to the upside. Anyway, that's it for this morning. We'll be looking for potentially a new trade. The SP 500 here is on the verge of starting to roll over with our short-term technicals. And if we do get that signal, we'll be jumping into an inverse ETF because it'll signal a type of trade where we should see a very quick waterfall sell-off. We saw that play over here. We also had that play over here, and we took advantage of them, and we're getting a very similar setup again today, and an inverse ETF for a quick, you can see how the market can drop very quickly. So this could be a 1 or 4 day pullback if our timing is on and the market follows through with the current downward momentum that's in place. We are long bonds, so this would be a quick trade to profit from a drop, and our bond trade should continue to truck on higher while we hold this and the market chops around potentially for a while. So what happens is when this is chopping around in a big volatility, in a big range, bonds are just slowly working themselves higher. And the same thing happened over here. Once this breakdown started, bonds started to go higher. And so that's what we're looking for, is to play this uptrend in bonds while the market trades sideways over here. Bonds should continue to move up, and we can try and get a benefit of both bond rally that lasts us several weeks and a quick drop in the SP 500 to profit from a pullback. Anyways, that's it for now. Talk to you in a bit.